Boom! What's happening? There are a lot of companies out there who pay dividends. And in today's video, we're going to look at the best dividend stocks you can invest today and pretty much until the end of the year. We're going to focus on a couple of metrics like high dividend yield is 5% or more, dividend safety of this company, and also the share price should be less than $50. Let's jump into this. Hello everyone, my name is Alex. Welcome to my channel and welcome to my investment journey. I hope you're staying wealthy and healthy. Don't forget to smash that like button, subscribe to my channel, and let's talk dividends. So the first dividend stock company I want to talk about is AT&T. This is one of the largest telecommunication companies, ticker T, just letter T. The share price today is $29. The dividend yield is 7.1%. And let's talk about the safety. We're talking about safety right now. Alright, so AT&T, let's look at this. So the company stock price before pandemic was $38.55 approximately. So it dropped 25 to 30% right now and started recovering slowly end of October. And you can see the stock price right now is like around $29. The dividend yield is 7.17% per year. I think what's also happened to this company is that with the 5G announcement, I think this company is going to jump back to the pre-pandemic levels and probably even higher than that. And right now is the best time to invest in this company based on the metrics here. What is also interesting here that AT&T has increased their dividends on average to 2% each year for the last 36 consecutive years. This is amazing. This is incredible, actually. And also the stock price gained 4% over the last month, which is great, and it outperforming all the other telecommunication sector on average of about 1%. Alright, so next one is Pembina Pipeline Corporation, PIM, ticker PBA. The current share price is $26. The dividend yield is 7.4%. This is great. And let's jump into details. Alright, looking at the Pembina Pipeline Corporation. So the stock price, as I said, $26. As you can see, pre-pandemic price was $40, and right now it's $26. Actually climbed a little higher. It was at a $20 mark beginning of November. The dividend yield is 7.42%. What is also interesting about Pembina Pipeline Corporation is that they're paying dividends every single month. So it means that every single month you're going to get dividends from them that you can reinvest and get free shares if you invested enough. Also, it's good to know that the company has access to $2.4 billion of liquidity at the end of the third quarter. So given this strong track record, stable cash flows, and healthy liquidity, this company is the dividend safe company. I would consider as 80-85% dividend safe. Two more coming. So the next one is Bank of Nova Scotia. Ticker is BNS. The current share price is $50. Actually, it was less than $50 a couple of days back. The market's performing better today, so it jumped a little higher than 50. The dividend yield is 5.49%. This is great for a bank company. And it hasn't come back to a pre-pandemic price share as of today yet. So it's a great place to start investing into this as well. Let's jump into details. Alright, so this one is very interesting actually. We're getting the financial sector. So Bank of Nova Scotia is a Canadian bank. It's traded on New York Stock Exchange and also on Toronto Stock Exchange, whenever you are. So the pre-pandemic price was $56 to $60, mostly $56 as you can see, and it dropped to $34 per share in March, as we all know what happened there. And it was actually flat until end of October, beginning of November, when the price started to climb back. And right now it is a $50 price. It is still considered a very good price, and it's climbing back to its pre-pandemic level. The dividend yield is 5.49%. It's also good to know that the Scotia Bank is split on up. It has been named to the Dow Jones Sustainability Index of North America for the third consecutive year and is now ranked at the top 15% of participating financial institutions from around the globe. So the Dow Jones Sustainability Index is considered the industry standard for measuring environmental and social governance practices. It just tells you that the company is in very good state today, and the dividend safety would be at 85 to 90%. Alright, and the last one, and I think the most exciting one actually, is Enbridge. The ticker is ENB. This is a Canadian utility company. The share price is $31 today, and the dividend yield is 7.7%. This is great. The company hasn't recovered yet to the pre-pandemic share price. So it's a great place to invest today. Let's jump into details. So Enbridge, why is it the most exciting one here? So looking at the pre-pandemic level, pre-pandemic prices, it's $42, $41 pre-pandemic prices. It went down to $25 in March. Of course, we know what happened there. And it was staying sort of flat, jumped to $30 and or so. And today it's at $31. It started climbing back in early November, end of October. The dividend yield is 7.74%. So this number is very good, and Enbridge also gives you a good exposure into utilities sector. So look at the other data for Enbridge as well. Enbridge is Canada's favorite dividend stock, and the history speaks for itself. So it has 65-year track record of paying regular dividends and a 25 whooping record of increasing dividends every single year. So this is how does it manage to increment those dividends. So Enbridge basically builds pipelines and allows utilities to transit oil and natural gas through them for a fee. And it has 10 to 20-year contracts with these utility companies. So this business is very sustainable. Pandemic significantly reduced oil demand and reduced the transmission by 40% year over year in the second quarter. And its stock fell 34% in March, as we just talked about. And the dividend surged to 9% because of that. And as the economy and the oil demand recovers, the company is trying to come back to its pre-pandemic price. Even when it's going to come back to its pre-pandemic price, the price, we're here for a long term, right? So we don't care what's going to happen to the market next year. We just keep holding it. We're going to get paying dividends. And as you can see, for 30, 20, 10 year, you can see there's a steady growth there. So you can still get a good appreciation from this company over a long-term period. All right, so these are the 4 dividend stocks that I'm thinking the best are right now in the market that you can invest to and hold them for long term. And don't worry about anything. Don't sell them. Just keep getting those dividends back, reinvest them, build up your portfolio, and build up your dividends year over year. And message me after it's all done. Let me in the comments what are your thoughts about these 4 dividend companies, and let me know what are your best dividend companies that you invest into, and let's help each other. You help me, I help you, you know. All right, thank you very much for watching this. Thank you for staying up to this moment. Don't forget to like this video, subscribe to my channel, and I'll see you in my next video. Boom, boom, boom. People love to do this stuff. All right.